economics is a topic which affects all our lives. For this reason, having some expressions in your vocabulary bank will not only help you in your work life, but also when chatting with friends. But let's face it, economics is a little dry as a topic, so let's get the boring words out of the way first, before going on to the interesting stuff. First, there is macroeconomics, which is the study of economics at a national level. For example, how countries interact with each other in terms of trade, finance, and currency policy. Then there is microeconomics, which is the study of economic issues for individual sectors, businesses, and people. For example, the microeconomics of the telecom sector, or even the telecoms company Vodafone. Then there is the laws of supply and demand, which, as I'm sure you know, talks about how the price of something changes depending on how many people want that product in relation to its supply. Now we've got that out the way, let's explore the more interesting stuff. First, there are two words used by business leaders across the English-speaking world, and these are headwinds and tailwinds. Headwinds are bad, and they refer to conditions that impede or hinder progress. For example, Europe's transition to green energy has been hit by the headwinds of a regional war. Tailwinds, on the other hand, are good and refer to conditions that are useful or advantageous to progress of an individual or organization. For example, low interest rates in the past decade have provided a tailwind to investment. Headwinds and tailwinds. Now, let's talk about words which describe problems in the economy. If an economy contracts for 2 financial quarters or more, this is called a recession. An informal way to express this is a downturn or slump. For example, the economy experienced a downturn in 2009 due to the financial crisis. Or, the European manufacturing economy experienced a slump at the beginning of the Ukraine war. If you're watching videos or reading about economic theory, you might hear the expression boom and bust economics. Boom and bust refers to a period of rapid growth followed by economic decline. There have been many boom periods followed by a bust, when the asset bubble created by the period of high growth finally bursts. For example, US and UK leaders pursued policies in the 1980s which led to a boom and bust for their economies at the end of the decade. When was the last boom and bust in your economy? Or indeed, are you in one now? A downturn, a slump, and boom and bust economics. The consequences of an economic downturn include high unemployment and to be unemployed or to be on the dole, as we say in the UK. This is when someone has no work. For example, my uncle has been on the dole since the factory closed. Other consequences include business bankruptcy, or when a business goes bankrupt, which refers to a failure of a business when they have no more funds to continue. For example, many large retailers went bankrupt during the pandemic as shops couldn't open. To be on the dole and to go bankrupt. If a country or major financial institution risks bankruptcy, they could ask for a bailout. A bailout is the act of giving a massive financial assistance to a failing business or economy to save it from collapse. During the financial crisis of 2008 and 2009, this happened all the time, when governments stepped in with large amounts of cash to stop national banks going bankrupt. For example, in October 2008, the UK government bailed out the Royal Bank of Scotland. The most famous example of a bailout happened, however, in 2010, when the International Monetary Fund, the IMF, bailed out Greece to save it from defaulting on its debts. A bailout and to bailout. Next, here are some ways governments try to fix economies. The first way governments try to do this is by cutting public spending on services to reduce debt. This policy is called austerity and was pursued by European countries after the 2008 financial crisis to try to get debt levels under control. For example, in 2010, the UK government cut public spending by an unprecedented level as part of its austerity programme. The other ways governments try to fix economies is to inject large quantities of cash into the system by printing money. This is called quantitative easing, or QE. There was a time not long ago when QE was avoided by developed economies because of the obvious risks to inflation. Nowadays, it seems to be a normal part of economic policy, as during and after the financial crisis and the pandemic, the US Federal Reserve, the Bank of England, and the European Central Bank have all implemented QE policies to keep their economies afloat. Austerity and quantitative easing. Words for economic recovery. The first is to rebound or at rebound. Physically, this is when something like a ball hits a surface and then travels up again. In economics, it describes a return to growth. For example, the economy rebounded strongly after the worst part of the pandemic. Another way to say this is to bounce back. For example, the share price bounced back when the CEO resigned. To bounce back and to rebound. Now, let's talk about some interesting words to describe economic problems on the horizon. The first expression is doom and gloom. This describes a feeling or attitude that things are only getting worse. It comes from the adjective to be doomed, which means certain to fail, die, or be destroyed, and to be gloomy, which means to be unhappy or without hope. For example, it's been doom and gloom in the company ever since we lost our biggest client. Or, the company's profits are down compared to last year, but it's not all doom and gloom, as we've just won a new contract. Another way we use gloomy is for the expression a gloomy prediction, which means to view the future pessimistically. For example, analysts offered gloomy predictions for the future of call center workers in the advent of AI. Doom and gloom, and a gloomy prediction. More words to talk about economic problems include to reach rock bottom, which means to reach the lowest point possible. For example, the housing market reached rock bottom in 2011, or consumer confidence reached rock bottom at the height of the financial crisis. Another interesting phrase for work or chatting with friends is an underlying weakness. An underlying weakness refers to a foundational or structural problem in the economy, business, or institution. For example, the company went bankrupt due to an underlying weakness in the supply chain. Or the investment bank Lehman Brothers collapsed in 2008 due to an underlying weakness in mortgage bonds. Use it in your next meeting if it's appropriate. You'll sound great. To reach rock bottom and underlying weakness. Finally, let's talk about some phrases for exploitation and economic injustice. The first expression is 0 hours contract. This refers to a labour system where workers only work when needed by the company and don't have the right to regular hours. For example, those who work through internet apps, delivering food and driving people around, and other precarious work are normally on 0 hours contracts. The next expression is to pay peanuts, which means to be paid little for your work. For example, due to the rise of AI, translation work now pays peanuts. Or, don't work for that company, they pay peanuts. Are you paid peanuts in your job? Let me know in the comments below. 0 hours contracts and to pay peanuts. Next we have to work on the black market. This is an illegal system in which workers are employed without a formal contract and for low wages. In some countries, it is normal to work on the black market. In others, it hardly happens at all. Which economy do you belong to? If your work is paid in cash, usually to avoid paying tax, then you work cash in hand. For example, my brother got a cash-in-hand job at our local pub. To work on the black market and to work cash in hand. Finally, here's another important word, a sweatshop. A sweatshop is a workplace in which workers are employed at low wages and in oppressive conditions. Sweatshops usually refer to the clothing manufacturing industry in the developing world, whose workers often work long hours and for low wages and in unhealthy or even dangerous conditions to supply the West with cheap clothing. For example, you must be careful when you buy your clothes that they have not been produced in a sweatshop. A sweatshop. To practice your English, why not visit us at skyrocketenglishclass.com for personalized one-to-one classes focused on real-world English and speaking. Or for hundreds of native speaker expressions, phrasal verbs and vocabulary to help you speak naturally, why not investigate our book, Next Level English 50 Lessons to Improve Your English on Amazon. Back to the video. To understand some of these words in context, listen to this real-life story about the financial crisis of 2008. Lehman Brothers collapse. The world's largest ever bankruptcy was filed on the 15th of September 2008 by the US investment bank Lehman Brothers. Until that moment, Lehman Brothers had been in operation for 164 years and was one of the largest financial institutions in the United States. During its long history, the bank had faced many headwinds. However, it wasn't until the subprime mortgage crisis of 2008 that underlying weaknesses in its investment portfolio became apparent, leading to the bank's collapse. In the days leading up to the bankruptcy, the Federal Reserve Bank of New York and several U.S. investment banks met to discuss the issue. Shares in the bank had reached rock bottom, and there was a feeling on Wall Street that the bank was doomed. In Europe, other banks were also facing collapse. In response, many national governments put together rescue packages to try to bail them out. For example, in the UK, the government bailed out the Royal Bank of Scotland in October 2008. In the US, however, it was decided that a bailout of Lehman Brothers would be too costly, so instead the bank was liquidated and its remaining assets sold. Lehman Brothers remains the largest bankruptcy ever declared by any business, and its collapse sent shockwaves through the economy, threatening the survival of the global financial system. The catastrophe changed the way banks did business forever and led to tougher regulation for money lending. But could it happen again? Let me know what you think in the comments below. If you enjoyed this video, check out the others in the series. Thanks for watching. See you later, alligator.